Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. Joined again by Rich Annunziata, the mentor in the T3 Live Active Trader Mentoring Room, where he mentors subscribers alongside Evan Lazarus. Rich, great to have you back on the show after you made your debut on T3 Live Video last Friday.
Yeah, listen, it's great to be back. Friday's video, I think I heard best video of all time, made from the studio.
The Nielsen ratings were
I don't know
off the
if
charts.
that, yeah, I heard about it, so just trying to deal with that. And going forward, I'm glad to be here. We can follow up with some names from Friday, go over some new stuff.
Just a reminder also before we get into the charts that Rich and Evan are hosting a webinar this Thursday. It's a free webinar at 4:30 after the close. Going to be providing some of the concepts from the active trading course. Going to be some really good stuff. Sign up if you haven't already. The link will be in the article that's attached to this video. But now we'll go ahead and take a look at the spider chart in a second. More choppy action. The epitome of summer trading was the title of the morning call this morning, and that's what we saw again today. The market chopped around. At the end of the day, though, the market remains resilient despite all these, gap up and fade, gap down and rally type scenarios. The market is still holding up constructively, in an upper level channel, but there doesn't seem to be much of an edge trading the indices right now. But an interesting point is that I can't remember how far back it was, but this is one of the least correlated markets to the S&P that we've seen over the last decade. So it's sort of the revenge of the stock pickers type of scenario, where stock picking and finding really stock selective action is more successful than it has been at any point in the last several years. So, Rich, what do you see from a technical perspective on the spiders?
Yeah, just going over with the spiders, we said on Friday how the 8 EMA was not as important, being that it's gone pretty flat now. If we could take a look at that.
Take a look at the chart.
The 8 EMA, now for the whole month of July, it was in control. The blue line right there, it never got below it. And now we came into the real end of the summertime trading, and now the 8's gone pretty flat. The 21 is still pretty flat. Looks like it's kind of important, but I think still you're going to have some random price action until it either resolves up or down. And the range now is probably, 170.5 to 167.5, I would say, in that zone. And now, once you get into these flat, choppy markets, then the EMAs won't work as well.
Yep.
So, I think it's important then to look for individual names that do have slope or look better than the spiders, or worse than the spiders if you're looking for shorts.
All right. When you're talking about stock-specific names in the market today, obviously you have to talk about Apple. If you followed the action at all during the session today, you obviously saw the news about Carl Icahn.
Who?
Uncle Carl, I believe, is his new nickname that Dan Lowe gave him based on his interactions with Bill Ackman. I won't go into detail there, but Icahn tweeted that he had a conversation with Tim Cook, the CEO of Apple, where they discussed Icahn's opinion that they should initiate a bigger share buyback, that it was a no-brainer. He said Tim Cook's doing a good job, and he also disclosed that he had taken a stake in Apple. And over the course of the day, more details about that stake were revealed. It was revealed that it's about a $1 billion stake, or a little bit more than $1 billion, which in the context of a $450 billion market cap stock, not huge, but it's more about the psychology and the confidence that comes with someone like Icahn disclosing a position in the stock. What was your take on that whole scenario today?
It's definitely confidence builder. If you're an Apple and you hear that he's an Apple, then all
same way it was with Netflix.
Same,
6 months
home run hitter, and now he's going after Apple. I mean, if we just pull up the chart, in July we actually began to catch a little bit. It was probably July 8th. We begin to catch. We were below the 8 and 21. We finally got back above them. And then the earnings gap, and since then, it's been, you saw slope come back into it. You saw it's been acting really well, really acting as an outperformer, whereas, couldn't even catch a bid in May and June. So now today, the move today, I thought the likely target would be the 200 EMA. And then when the news came out, it just juiced it up. And in the trader room, we were looking at it on a small time frame. Once you have volume and speed come into it, the small time frames, probably like a 3 minute, probably like a 3 minute. Normally, I think the news came out at around 1, 2 o'clock.
Yeah, something like
so
that.
normally I don't really use a 3 minute at around that time.
You can see when it came out right here.
But you can see right there, once you see that speed and that volume come into it, you can see that little pivot there in the 3 minute, give you a nice little entry just for cash flow, and then again actually off the EMA and even into the close. So you got 3 buy points off the 8 EMA there on the 3 minute chart. That's the active trade away right there. That's bread and butter.
Boom.
Making money off Carl Icahn, jumping on Uncle Icahn's back.
So Uncle Carl added $20 billion to Apple's market cap today with that tweet. Just to give you some perspective, $20 billion market cap is equal to Chipotle plus Under Armour. So the power of Twitter shown again after that big documentary that CNBC did about Twitter revolution. It is a powerful tool, and it's something that if you are trading, it's something that you should, if you're a short-term trader at least, be in tune with. But moving down the list of some positions that I know Rich is involved with, just so you can get some rationale for why he's involved with those positions. I know Baidu is one that you've been involved with, Rich, that we spoke about. We can go take a look at the daily chart of that.
Baidu was one on the daily chart a few days back, flashed a buy signal off the 8 EMA after the earnings announcement. It held above 132, 133, traded pretty cleanly. I actually did take some profits off into the 140 level on Friday, and then today actually day traded around the 140 level. You could see that nice level that we built there with 2 touches, and if you look at an intraday, if you look at like a 5-minute, you could see in the morning, we held up okay. We actually went back to higher day, made a new high, and then around 12 o'clock begin to set up on the 5-minute, and then once again, after making another new high on the intraday, set up again on the 5-minute at around 2 o'clock. So for targets, I did get back down to what I came into the day with. The targets are 142 to 144. You probably have to go out to like a 2-year weekly. You can see why. There's an open gap that starts at around 142. And then a complete gap fill would be 144. So that's what I'll be looking for in this trade. So down to basically what I came in with on from Friday.
If I understand it correctly, the bread and butter of the active trader room are those 1 to 3 day type setups.
Yes.
That's not to say that there can't be scenarios intraday where you can apply some of the concepts from the course.
Yeah, once you locate that pivot, if you want to try to make some money off it over 3 or 5 minutes, because normally that pivot will act as a catalyst and get more people involved. So you'll get a push, you'll get volume, and not just have the day traders in there, other swing traders click the pivot too. So it's important to locate those pivots and then plan around them, even for cash flow, it's okay.
Then another name I know you've been involved with, and that's been on people's radars, is LinkedIn. We're going to take a look at the daily chart. That's sort of a bread and butter setup in all of our
Similar
education.
setup, yeah.
You have a gap up and a really clean base breakout there. From an active trading course perspective, what are some of the things you were looking at for that trade?
Well, basically, the way that we held the gap and really didn't come in, so it was more profit taking versus selling. Anytime a gap doesn't get filled and just holds up there, the 8 held slope. And you can see once it came within striking distance of the 8 EMA, you can see we had a nice lift off of the moving average, and also the upgrade helped too. But these are the type of names that will get upgraded, normally. So
I mean, this is the bread and butter type of setup that's been so successful in this market over the last few months. You talk about Netflix was Mark Sperling's first trade idea of the week. You zoom a little bit out on that, you can see a perfect example of another stock that had this short-term move here where based after that earnings gap up and then went, and then a longer-term base, and then it went off of that. So that's definitely one of our bread and butter setups, and one of the bread and butter setups from the course. Workday.
Workday, yeah, I took a lot of flack for that actually.
Yeah, that's a trading floor.
That was the only negative feedback I got from the video.
Yeah, whatever. I thought it was fun.
Anyways,
Workday.
Yeah, so I'm still with this one. They actually report the end of the month, so I still have some more time. But I'm just going to use that 8 EMA until it gives way. So right now my stop went from being the 71 to 72. Now probably 72.5 to 73 will probably be a decent out on that one. It's a little thin.
Yep.
Good old Workday.
Mercado Libre Meli, which is sort of like the South American eBay.
I love eBay in South America, so this is why I got involved with it. Now you can see the similar setup again. Great push up, slope into the 8 EMA, and buyers, they stepped up once again. Now, because the stock is a little on the thin side, I do reduce share size with these type of names, with like Workday and Meli, just to compensate for that extra risk that comes along with a thin name. So.
And then we wanted to diversify a little bit in this recap. We've been heavy on tech, which is not a coincidence because tech has been really the most compelling area with a lot of really good setups, but that doesn't mean that that's all anyone trades. Halliburton is another name that demonstrates some principles from the active trader course, and we can just go ahead and take a look at the chart of that.
Yeah, if we just bring up the chart of Hal, basically 46.5 to 46.60 was a level with multiple touches, a little bit of a ascending triangle, characterized by the equal highs, higher lows. And today, we did poke our head above the level. Not the best close in the world. I didn't take it overnight. I did treat it as more of a day trade, as a cash flow type trade. But this is an idea that maybe tomorrow and going forward, if today's low will hold, could maybe give a nice trade there. It's priced, around 46 a share. It's nice to trade. You can get in and out. It's thick. And as far as the oil names go, they're not great traders in general, but you can't ignore a good setup. So if you do want to mess around with anything in the oil space, I do like the look of Hal versus a lot of other names.
And then one setup, just to make it clear that not everything that goes on in the active trader room is a winner. Facebook today was tough.
Yeah.
I know a lot of people were looking for it in our community for potential continuation. We highlighted it as a setup we liked in our newsletters and things like that. It had surged off that gap from earnings really well, digested those gains, and looked poised for another potential setup. There wasn't much in the way of resistance left. We can go ahead and take a look at the chart of Facebook so Rich can do a little more analysis of that.
Yeah, so thanks for bringing that one up today.
Hey, just got to keep it real,
Yeah, definitely have to keep it real. So if you go from the low, from the post-earnings beat, if you go from that low, I'm not sure what the exact date was, we're probably at a 38% pullback right now. So I would say anything 38% to 50% is healthy. If you want to draw for the viewers out there, it's very nice of you, John. The 38% line so far has been holding. Now, the 8 EMA didn't really hold the way that I thought it would have. We did come below it. I would be curious tomorrow to see if today's low holds. If not, I'm going to probably be looking for probably 36.30 to 36 even as a level of support that I would want to see. If you drill it down to a 60-minute chart, you could see some of those pivots in there a little bit clearer, maybe, or 55-minute. You could see the next real level is like 36.30. So I think that if today's low doesn't hold, 36.30 to 36 could be a great opportunity if you're flat to position to maybe nibble long, just a tier 1 swing, feel it out until there's a clear pivot to really trade against. But still okay, just didn't do what I thought it would have done today.
All right. Well, a little taste of what you get in the Active Trader mentoring room every day with Rich. Outstanding education in there. We try to throw some fish in your boat, but we also try to teach you how to fish, as we talked about in the email about that webinar. I think it's a great chance for you to get a taste of what the education is like in the Active Trader course. Rich, any more thoughts about that Thursday, 4:30 p.m. webinar?
I think it's going to be an epic webinar. Again, that's from me, not from Laz. Laz is more, he won't play it up as much. But I think it's going to be great. If you don't know about the room, come and check us out. If you like what you heard, the way that we go about our business day in and day out, we're always trying to think and be ahead of the crowd on things. So please come by Thursday. It's free, and it'll be a lot of fun.
All right. Well, that's been today's daily recap. John Darsie here with Rich Annunziata. Hopefully you'll see us again soon. Have a good night.
Thanks.